Everyone knows, hey, inverted yield curve, that means recession. Let me bring in Main Street Asset Management CFO Aaron Gibbs. And Aaron, so there's a lot of combinations, right? I guess maybe 10 combinations. And of all those combinations around the world, 93% are inverted in Canada, 91% in America, 88% in Germany, 86% in the UK, 80% in Australia. So the bottom line is, overwhelmingly, around the world, it is saying recession. And then if you go to the one that Jay Powell uses, the 10 and 30, forget about it. Not only is it inverted, this is as steep as it's been. You got to go back to years that were just absolutely disastrous. The Great Depression, the 80s, So are you convinced that recession is still in the cards?
I think it is still very likely, but remember, we already went through a recession just during the pandemic. It can be 2 quarters, it can be pretty small, something that you don't really feel.
They brushed that 2-quarter thing aside.
Exactly.
They're like, yeah, that one don't count. Like, I'm not going.
So yes, it could be, but also, we're so anticipatory when it comes to the market. We're so forward-looking. We could have a recession. It could happen so quickly. The stock market, it just could be a quick bump in the road.
Right.
So what happens in the economy and how you invest doesn't necessarily have to be the same thing.
I feel like so many experts have come on the show in the last couple of years, and they've been so myopically focused on recession that they've missed big-time opportunities in the stock market. And listen, we do this to make money in the stock market.
Right.
And when you miss amazing opportunities, it's okay to come on and blow it off, but that's what your job is. How do you deal with that?
So one, I look at areas of strength, particularly within the economy, because though the U.S. economy, maybe we fall in recession, and it might be mild, and we know, there are obvious areas like office buildings, that type of thing, that are going to be weakness. But when we look at single-family home housing, when we look at entertainment, those areas have been incredibly strong. The U.S. consumer is still willing to buy. And so I think if you focus on those areas that have strong fundamentals, good cash flows, your safety stocks, you're still going to be able to do well.
We had $2.1 trillion in so-called excess cash floating around out there. It just doesn't go away overnight.
Right.
Real quick while we're in the recession talk. So deep recession, you're saying these are your signals, commodities, the inverted yield curve, but no recession. Credit markets, this is interesting.
Yep.
Because when you saw SVB go down, everyone was afraid this was going to be the next shoe to drop. And it hasn't dropped so far. Housing's coming back. Equities are held up. Credit markets, are you surprised it's never materialized? Or so far it hasn't?
So far it hasn't. And that's a really, when you look at these sort of check marks, we've got a lot going for it on the no recession side of the board and some big indicators. So right now, yeah, keep an eye on it. But I certainly don't see it for third quarter.
All right, so then let's talk about how to make money in this environment. There are 3 things that you like to invest in right now. You like healthcare, you like Japan, and U.S. residential real estate. Healthcare, a real laggard right now. Why do you think it's coming back?
I think it's just sort of a long-term play, a good value. It's been sort of looked over for the past couple of years, and I think it's just a good, safe entry point and just a long-term growth story. Japan, this is just something, it's been doing really well.
Really well,
this year.
Understatement.
Yeah,
it's like a 35, 40-year highs, that kind of thing.
And it's actually just sort of teetered off. It's basically stabilized the last 2 months. So I actually think this is a good entry point. If you missed the last 6 months, you might want to get in now. This is the potential. And then U.S. residential, Ed Yardini talked about it. It's just one of those areas that's
so even though these
names,
really well. Builders have made huge moves already, you still like them. You were still kind of chasing them.
Yeah, I think there is just such a lack of supply. And we've seen that single homes are still going so fast at higher prices, even with higher mortgage rates. This trend has not stopped, and it hasn't hit its peak. So even when you're looking at its pricey, it's still got a long way to go.
Your number one concern then?
I would say my number one concern is really outside the U.S., exogenous shocks. The U.K. is very vulnerable. I was in England all last week. They are not in a healthy state, and though it's just one country out of Europe, I think there's definitely risk of.
It feels like Europe is a tinderbox in so many ways, economically, socially, domestically. It feels like they box themselves into a corner, and it's just all chaos.
And we are a global economy, and there is contagion across. So I think I'm pretty secure about where we are within the U.S., even though the Fed could derail that. I'm more concerned about what's going to happen outside and how that affects the U.S.
Right. Aaron, thank you so much. Always appreciate you. All right, folks, coming up in the middle class.